Hey, good morning, everybody. Today is Friday, March 4th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The S in CANSLIM stands for supply and demand and reminds us that we want to favor stocks that have an average daily volume of at least 500,000 shares and trade at least 140% of average daily volume on the day that they break out. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 6 came from the airline industry, 4 came from internet entertainment content, 4 came from refining and marketing, petroleum refining and marketing, 4 came from consumer finance, and rounding out the top 5, we have quite a number here: healthcare facilities, auto parts, commercial finance, home furnishings, apparel, footwear and accessory design, semiconductors, packaged foods, precious metals, all with 3 stocks each in the top 100 most powerful stocks in the most powerful industry groups. Of the industry groups that we see today, only airlines has been showing up on a fairly regular basis. Airlines may be a good place to look for leadership in this market. Let's take a look at what the Russell 2000 is doing. As I've been saying recently, I think the Russell 2000 is the key to the market going forward. We'd been watching this resistance area down here in the 1040 range, which actually becomes support right now. We took out that resistance early in the week, and now we're actually testing another significant area of resistance right here in the 1079 area. That area was the low that we put in October and should offer significant resistance here. This might be a good place for the Russell to take a pause. Notice how yesterday we challenged this area but weren't able to break through. We did close at the high for the day, which should make the bulls happy. If we were to take out this resistance area, the next significant area of resistance would be way up here in the 1205 area. But for right now, 1079 seems to be the area that we'll keep an eye on. Let's see what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market, and to my way of thinking is the most important element. So let's take a brief look at the market. After a lower start yesterday, stocks reversed to close higher for the second session in a row, showing bullish power. Trading volume was also higher, giving us accumulation across the board. Accumulation is when stocks trade higher on heavier trading volume than the prior day, and is a sign of institutional buying in the market. Institutional buying is bullish. As we mentioned earlier, the Russell 2000 had another strong day. After having bettered the critical 1040 area, the Russell's attacking the next level of significant resistance in the 1079 range. Our market timing model remains on a margin signal. A margin signal is our most aggressively bullish signal and indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. All that noted, we have only 21 stocks on our universal watch list. That's an unusually low number. In a healthy market, we generally have between 50 and 90 stocks on the universal watch list. So far, there hasn't been a lot of top-rated participation in this market. That may change. For now, we should continue to be cautiously bullish. Advancing issues topped decliners by better than 3 to 1 yesterday. The New York Stock Exchange advanced decline line is looking a bit more bullish. New highs continued to outperform new lows. Our overbought oversold indicator is indicating an overbought condition in the market. Keep in mind that an overbought market can become much more overbought. Large capitalization stocks outperformed small again yesterday and continue to handily outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. Yesterday's trade was encouraging to the bulls, and the Russell 2000s recaptured significant resistance. While this remains a volatile and somewhat unpredictable market, it appears to be fertile ground for the bulls. As always, be careful and keep your stops in place. Okay. Yesterday, the NASDAQ Composite was up 4 points, or 0.09%. We closed at 4707 after having opened lower. The NASDAQ closed very near its high for the day, which is bullish. Trading volume was higher than the prior day, giving us an accumulation day for you followers of William O'Neill. We are in a confirmed uptrend in the market. We have been since February 18th. We have 2 distribution days since confirmation of the uptrend. That's a reasonable distribution count. Right now, the NASDAQ is bracketed by support down here in the 4506 area and resistance at this trend line. As we've been noting, this trend line goes all the way back to the beginning of the bull market in 2009. Were we to break that trend line, our next significant area of resistance is up here in the 4900 area. Our market timing model is on a margin signal. A margin signal is our most aggressively bullish signal and indicates that aggressive traders can leverage their portfolios utilizing margin. More conservative traders should be working toward fully invested. Let's take a look at the S&P 500. Yesterday, the S&P 500 was up 6.95 points, or 0.35%. We closed at 1993. Notice how we took on resistance right here in the 1993 area and failed. We closed near the high for the day, indicating that we may want to try that resistance again today. Trading volume was higher than the prior day, giving us a bullish accumulation day. We are in a confirmed uptrend, have been since February 18th, and have only 1 distribution day since confirmation of the uptrend. Right now, the S&P 500 is bracketed by support at this trend line that goes all the way back to the beginning of the bull market, and resistance right here in the 1993 area. If we were to break through that resistance, the next significant area of resistance is up here in the 2044 range. Our market timing model is on a margin signal. Before we go, there are 3 stocks that I'd like to take a look at today. First one isn't from our universal watch list. It has been on our universal watch list in the past, but it has fallen off recently. It's Broadcom Limited. Broadcom is a Singaporean designer of analogics for the telecom, industrial, automotive, and computing markets. The stock is working on this first stage double bottom base. Notice how the stock came down, put in a bottom, put in a midpoint high that's lower than the high of the left side, and then undercut this low. That's a double bottom base. The pivot point for a double bottom base is the high of this midpoint. So if you imagine this as a W, the pivot point is going to be the midpoint of the W. Broadcom has a pivot of 3869, gets a checklist rating of 52, which is very low and keeps it off of our universal watch list, but I suspect that it will wind up back on our universal watch list in very short order. Last night, Broadcom came out with much better than anticipated earnings and appears that it's going to gap higher this morning at the open. On a longer term basis, Broadcom is working on this long-term first stage base with a pivot point in the 150.50 area. And if you missed the gap this morning above the 38.69 level, that would provide a good secondary buy point. Next, I want to take a look at MaxLinear. We've been talking about MaxLinear quite a bit recently as it works on this third stage base. MaxLinear's universal watch list rating fell to 84 yesterday from 88 the prior day. The reason for that is that its relative strength dropped from 99 to 98 yesterday, which indicates that MaxLinear is outperforming 98% of all of the stocks on the market over the past 6 months, as opposed to 99% of the stocks on the market over the past 6 months. We're working on a third stage base with a pivot point in the 1775 area. MaxLinear would be a good place to put some money if we were to break above that 1775 area on at least 140% of average daily volume. As we've been noting recently, we've been seeing a lot of accumulation out of MaxLinear. Notice all these blue spikes in volume, and we see very few red spikes in volume. Even in the past few days, we've seen good solid upside volume out of MaxLinear. Worth keeping an eye on here. Last stock I want to take a look at here is Smith & Wesson Corporation, which manufactures firearms, including revolvers, pistols, rifles, and firearm-related products and accessories. The stock right now is working on this second stage base, gets a 72% checklist rating, has a pivot of 26.54, and like Broadcom last night, reported earnings after the close. I expect that probably Smith & Wesson is going to gap above this pivot point in the 26.54 area, and like MaxLinear, has been showing some great accumulation over the past year or so. Notice all these spikes in upside volume with very little in the way of spikes in downside volume. Look for Smith & Wesson to gap above this 26.54 area on at least 140% of average daily volume today. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.